All right, let's dive into Rainier's latest earnings. The company is smack in the middle of a huge strategic pivot, and honestly, these third-quarter results are a massive test of whether that turnaround is actually working. So, let's get into it. So here's the big puzzle with Rayonier right now. The company just delivered an absolute knockout quarter, completely blowing past what Wall Street expected. And yet, the stock is getting hammered this year, way behind its peers. So what is going on? That's what we're here to figure out.
Okay, first things first. Let's look at the headline numbers that really made everyone sit up and take notice. And look, to be blunt, Rayonier didn't just beat expectations, they absolutely crushed them.
The big one, pro forma earnings per share, a key profitability metric, came in at 32 cents. This was the number that really turned heads.
Total revenue, that landed at a solid $177.5 million for the quarter, also way ahead of what anyone was predicting.
And here's the real kicker. Adjusted EBITDA was over $114 million. Now, get this. That's pretty much double what they did in the same quarter last year. Just a massive, massive jump in profitability.
You know, the scale of this surprise is what's so important here. The consensus on Wall Street was looking for something around 22 cents a share. Rayonier comes in and posts 32 cents. That's a beat of nearly 45%. This wasn't just a rounding error. It was a huge outperformance. So the question is, what fueled this fire?
So where did all this horsepower come from?
Well, the story of this quarter, it wasn't really their traditional timber business. Nope, it was all about the land. This chart right here tells you pretty much everything you need to know. Just look at the breakdown of their adjusted EBITDA. That real estate segment pulled in $74 million. That's more than their Southern and Pacific Northwest timber businesses combined. It was, without a doubt, the star of the show this quarter.
And management wasn't shy about it on the earnings call either. They called it a step change in the earnings power of their real estate business. This wasn't just your run-of-the-mill land sales. It was supercharged by this one enormous 21,600-acre conservation sale down in Florida that basically pulled a ton of value into this single quarter.
Meanwhile, their core business, timber, was, well, it was a bit of a mixed bag. The Southern Timber segment actually had a good quarter. EB each day was up 13% because they harvested more wood. But the Pacific Northwest, that continues to be a real weak spot, with results sliding back as that lumber market is just taking longer to recover.
Okay, so that's the quarter that just happened. But you know how it is? The market is always looking forward. So let's talk about what they're guiding for and the huge strategic moves that are really going to shape Rayonier's future.
And it sounds like management is feeling pretty good. For the full year, they're now saying they expect to finish at or maybe even above the high end of their previous guidance. They're essentially telling the market that the momentum they've got, especially from that real estate business, is going to keep on rolling.
Now, this is where the story gets really, really interesting. Right before this quarter, Rayonier sold off its stake in a joint venture over in New Zealand. This one move totally transformed their finances. They pocketed over $700 million. They slashed their net debt from almost $750 million down to just $130 million. And they ended the quarter sitting on nearly $1 billion in cash. That financial firepower is exactly what's funding that huge $1.40 special dividend they announced. And they're not just sitting on that cash. They're making a massive bet. A so-called merger of equals with their competitor, PotlatchDeltic. This is an all-stock deal that creates an absolute giant in the land resources space. We're talking an enterprise value over $8 billion, with control of more than 4 million acres. Management thinks they can squeeze out $40 million in annual savings once they put these two companies together.
So let's pull all these threads together. We've got a huge earnings beat, a completely transformed balance sheet, and a mega merger in the works. Let's piece it all together and figure out what it all means for investors heading into the next earnings call. And this brings us right back to that paradox we started with. In spite of all this positive news, Rayonier's stock is down at whopping 25% over the last year. Compare that to the broader timber and forestry sector ETF wood, which is down only 11%. So Rayonier is lagging, and it's lagging by a lot. So why?
Well, it really all boils down to this classic bull versus bear debate. The bulls, they see all the catalysts lining up, successfully integrating the merger, continuing to cash in on that valuable real estate, a fortress of a balance sheet, and even potential help from tariffs on Canadian lumber. But the bears, they see the risks. What if they fumble the merger integration? What if the lumber and pulp market stay soft? And the big one, was that incredible real estate quarter just a one-hit wonder?
So for the next call, our rating is outperform. Here's our thinking. We believe the market is way too focused on the temporary headwinds in the timber business and is fundamentally undervaluing this whole strategic transformation.
That delevered balance sheet gives them a huge margin of safety, and we think that step change in real estate earnings is going to be a lot more durable than the market is currently giving them credit for.
So, finally, that brings us to the trade. If you believe this thesis, how could you actually put it into action? The trade idea here is a classic pairs trade. On one side, you go long Rayonier stock. The goal is to capture all that potential upside from their company-specific catalysts, making the merger work and continuing to nail those high-value real estate deals. But at the same time, you hedge that bet by shorting the timber and forestry ETF, Wood. The whole point here is to try and isolate Raynier's unique turnaround story. If the entire timber sector tanks because of, say, weak housing data, your short position on the ETF helps cushion the blow. But if Rayonier executes its plan and starts to close that big performance gap we saw, you get to capture that outperformance.
And of course, as always, please remember this is all for informational purposes. This is not financial advice.